Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is Market Today. Before we start off by talking about stock markets, the trade setup today, it is important to mark the unfortunate, tragic events that unfolded last evening. For all of us, it was a painful evening for all Indians at large. What we have now seen after 26 people were people's lives were claimed in that dastardly terror attack yesterday. We are now seeing Prime Minister Modi cut short his important visit internationally and return to India. He has returned to Delhi. He's going to be holding this emergency meet with S. Jaishankar and other ministers on the J&K attack. PM Modi has cut short his two-day visit to Saudi Arabia and returned to New Delhi this morning, as 26 people were reportedly killed in that terror attack in Jammu and Kashmir's Pahalgam last evening. What we are also hearing is that Finance Minister Nirmala Sitharaman has also informed by tweeting that she's cutting short her US and Peru visit, her maiden Peru visit as well, to be with the people of the country in this difficult and tragic hour as well. Definitely an unfortunate event. I think all eyes of Indians are at finding out what will be India's response to this deadly attack that we've seen in the recent past, the deadliest attack since the Pulwama attack that we saw in 2019. Moving on to the Indian markets now. Remember, Indians' benchmark equity indices, they rose for the sixth consecutive session as of yesterday. In fact, we've been claiming higher highs in these last 4 to 5 odd trading sessions for the Indian markets. 24,200 was seen on an intraday level yesterday. We've also been seeing across the board buying take place in both benchmarks, broader indices, banks, financials as well. Yesterday, it was even the real estate stocks that pulled up in trade. Remember, now as we move forward to today, a rally in global markets is likely to support this ongoing momentum in the Indian equity markets. Of course, the rally in US markets overnight was led by hopes of a de-escalation in trade war between US and China, along with US President Donald Trump's softer stance towards US Fed Chair Jerome Powell. And that could now push the global markets higher in trade. As of last night, we did see that the Dow Jones Industrial Average ended about 2.6% higher, Nasdaq about 2.7% up, and 2.5% uptick was seen even on the S&P 500 index as well. Following this morning, we've seen even the Asia markets turn green. Japan's Nikkei surged about 2% in early trade. Kospi also increased by about 0.6% in trade. We also did see that Australia's ASX 200 added about 1.5% in trade. Hang Seng was up by 2% as well. Chinese index was flat with a negative bias, but it is Gift Nifty that's again pointing out to her 200-point higher opening in trade today. So we could be looking at a 24,370 kind of a move in trade today. As also, this is on the back of foreign investors buying now in the Indian equity markets. Even yesterday, FPIs poured in money worth 1,290 odd crore rupees in the Indian equity markets, whereas DIIs, on the other hand, they sold stocks worth about 885 odd crore rupees in trade as well. As we move into today's trading session, all eyes will also be on the earnings front. Today, there are a lot of earnings that are going to be coming in. LTI Mindtree, Tata Consumer Products, Bajaj Housing Finance, 361 WAM, Canfin Homes. We're also going to be seeing Dalmia Bharat, among others, that will be reporting their earnings. But the earnings that will see a reaction will be also important to watch. HCL Technologies, that will be the first one that we will be watching out for today. The numbers came in after market hours yesterday. The IT company has reported a net profit of 4,307 crores for the March quarter. This is up 7.8% on a year-on-year basis. Revenue has increased by 6% on a year-on-year basis as well. The company has announced an interim dividend of 18 rupees per share. What's good is that the guidance, the revenue expected to be in the range of 2 to 5% has been retained on a year-on-year basis in constant currency terms. Margins are expected to be between 18 to 19% as well. Largely in line with estimates is what HCL Technologies has posted. AU Small Finance Bank is another one. Here the net profit was up by 36% to 503 odd crores. The net interest income also rose by 56.6% to 2,094 odd crore rupees. The gross NPA also came in cooler at 2.28% versus 2.31% sequentially. Net NPA also reduced a tad bit, so 0.74% and from 0.91% that was seen in the last quarter for the company. Now, Havells India is another one that we'll be watching out for. Here, the consolidated YOY numbers show that the revenues were up by about 20 odd percent at 6,544 odd crore rupees as well. We're also looking at how the margins came in almost flat at 11.6%. Net profit up at 15.9% at 518 odd crore rupees. We'll look at that. Vari Energies is another one that we'll be looking at. Here, the consolidated YOY numbers show that the revenue uptick of 36.4% was seen at over 4,000 crores. EBITDA also came in at 923 odd crores versus 418 odd crore rupees. So definitely a sharp jump on that front. Margins came in at 23% versus 14.2%, and the net profit improved by 34% as well. That's another one that we'll be watching out for. Another one in terms of the earnings front, Tata Communications will be something that we'll be watching out for. Here, although the revenue is in line, but the margins have actually had a tad miss, and that could be seeing some kind of a negative reaction in trade today. Cyient DLM is another one that we could be looking at. Revenue improvement of 18%, EBITDA up by 50%, again on a year-on-year basis. Margins at 13.4% versus 10.5%. So largely on the improving side on all the parameters that we have seen for this company as well. So those will be the important numbers that we'll be watching out for. Let's now welcome our guest on board to understand more about the markets and the way forward from here. Mr. Gaurang Shah, Senior Vice President, Geojit Investments, is now joining in. Warm welcome to you, Mr. Shah, and thank you so much for taking the time out for this discussion. The way we have seen overnight Donald Trump's statements again coming in rather on a positive note, whether it is by way of talking about he's not intending to fire Jerome Powell in any which way. He also expects Jerome Powell to cut interest rates sooner because he wants some support for the US economy. What do you really see? And of course, on China as well, he's talked about that the tariffs will be way lower than 145%. We've been discussing how every day Donald Trump changes his statements, and you've been marking that for us week on week on the channel as well. What are the latest statements pointing out to, sir?
Thank you so much, Sakshi, for having me on the show. Morning to you and all the viewers of BTTV. First of all, my heart goes out to the family members who have lost their dear ones in yesterday's gruesome attack, and wishing a quick recovery to all those who are injured. My sense is that the government will definitely give a definite reply to the terrorism that has been again starting to show up in the state of Jammu and Kashmir. Unfortunate when tourists have just gained confidence and started to visit. Livelihood depends upon their on tourism. You know that very well. All of us know that. So let's hope there is a suitable reply from which I'm quite confident the government will definitely do it. Now, to answer your question, I don't know whether to laugh or cry, to be very honest, on whatever President Trump, so-called intelligent President Trump is doing and the flip-flop that he's been doing. I mean, if you really wanted to do what you're doing right now, then what was the use of announcement on the 2nd of April? And sending the entire financial market, including US markets, into a turmoil. What are you going to gain out of it? And it's, a very simple, Sakshi. Look, he's president for 4 years, right? 6 months have gone by. It's just 3.5 years that he's going to be president. You're going to have election again. We don't know what's going to happen, whether it is going to be Democrat or whether it is going to be Republican. He's mentioned that he's willing to again stand for the presidency, but there's a big question mark. So for 3.5 years, if he wants the entire world to shift their manufacturing and services capability into US, it's not going to happen. I mean, it's common sense, actually. I mean, if you and me were businessmen and if we had business, we had exposure to American markets, why would we shut down our capacity in the place we are, incur loss, go and incur new expense, open a manufacturing or a service facility in United States of America, which according to me is going to be high-end cost of land, cost of labor, cost of laws and bylaws, and other costs that you're going to incur. And eventually you're not going to make a product which is going to be cheap, right? So, I mean, what is in his mind, God only knows. And it's very surprising to see these kind of statements. And I'm quite disappointed with the kind of language that he has used, wherein he used certain words that global leaders are wanting to dash You don't speak like this. You are a president of a developed economy. You have to keep your ego aside. You can't be talking in terms of absolute, unsuitable parliamentary language for your Fed chief. You can't be talking unsuitable language for the other global leaders. You have to respect them. And that's what China also mentioned, right? That unless and until US behaves and respects, we are I mean, if they behave and respect us, we are willing to talk. Otherwise, things will be where they are. And now in this 90-day period, I think it's all I mean, I can only laugh it out, Sakshi. My sense is that, and I also mentioned last time, common sense and wisdom should prevail upon minus Donald Trump, the other advisors that he has in his administration, and tell him and talk to him that what he's doing is finally going to be a painful affair for the citizens of United States of America. Countries who have an exposure, and of course this tariff now is sweet talking that we'll be sweet, we'll be nice. I mean, be what you are, man. I mean, do your job. As simple as that. Don't make a mess around in the world economy by keeping your ego at the pinnacle of everything. So just wait and watch. I think our markets have been very smart. Our
Yes.
markets were one of the first markets to recover
Yes.
and overcome the kind of 2nd April and post 2nd April. And I'll give you one date. Sakshi, 7th April, we are at 21,800 or somewhere below that. And it's just been about 2 weeks plus kind of time horizon, and we are at 24,200 and 300. Maybe the gap up opening will also give us much more upside.
Yes.
I have always maintained confidence. I have always maintained commitment towards Indian equity market, and I will continue to do that for many, many years. I think we have a different story to tell to the rest of the world. My only request is that we should have confidence in ourselves and conviction in ourselves to believe in our growth, capital markets, and economic growth. I have recommended buy earlier. I recommend it today. I'll recommend it going into the future. And of course, gold is 1 lakh, Sakshi. Good news for you, 24 carat. So that is going to be a sweetener again. Expect much more higher levels, but I think we are here to stay. Q4 numbers are supportive. I hope they stay. I hope Q4 numbers stay on track, and the new financial year that we've started, I think will deliver better than what we did.
Okay, we'll deliver better than what we did, and that's the expectation. Rightly pointed out by Gaurang, we are seeing that gap up of 200 points. We were even higher just at the pre-open tick. 24,500 is what we saw right at the pre-open tick open, but 24,400 right now. Let's hope that this sustains for the better. I think the big question now, Mr. Shah, is that, is everything that was supposed to be worst already priced in into the markets? Are we now looking ahead of, like you pointed out, we don't know and we don't want to anticipate what Trump's move will be. Instead, rather, let's look inwards. Let's look at our own fundamentals. Let's look at our own resilience and strength. And probably, do you think that, we are on course to recover? Or do you think there could be some kind of a correction that could again strike?
Well, you can never say never in stock market, Sakshi.
Yeah.
That is one thing that I learned post 2008,
Yeah.
Lehman Brothers crisis. I deleted the word impossible from the stock market, my knowledge, because I believe everything is possible. And the so-called developed market, US, is where Lehman Brothers crisis happened, right? And again, you are witnessing in 2025 something crazy happening in America. Look, I will say that we are living in an uncertain time as far as the global news flow is concerned, especially the US, the so-called wisdom-oriented President Trump and his rest of the team members. We don't know what he's going to think tomorrow morning and what he's going to sign as an executive order and what he's going to implement.
Yeah.
My sense is that I hope I'm right. It is just a wild guess. I think it was a stunt that was done by President Trump in terms of tariff 180 plus countries. If you wanted to do it, you would have done it on 2nd April, right? You wouldn't have waited for such a long period of time, given a 90-day window period, and then come around and sweet talk the world that no, you are a nice person. I'm the nice guy. I'm willing to negotiate. I'm willing to talk, etc., blah 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 blah. So uncertainty is there, and like I mentioned, Sakshi, we were at 21,800 on 7th of April. Today
Yeah.
we are on 23rd of April, and we are at 24,300 or 200. So the recovery has been significant. You will
Yeah.
get days of profit booking undeniably. But momentum continues to be upside from a long-term point of view.
Right. Since you talked about earnings, I want to take off with IT first. HCL Technologies reported its numbers yesterday, and we've seen large part of big heavyweight IT numbers now out. Two more remaining. LTI will come in now, and of course Tech Mahindra thereafter. What exactly is the sense that you made of the IT sector earnings? This was the big question mark. We were not sure of how the guidance will be. Looking at all this Trump tariff talk and the uncertainties that could lie in the US economy, which is their biggest playground. What is the sense that you're making of the earnings that have been reported, sir?
So my sense actually is that look, fourth quarter historically is not very exciting for IT sector, right? We've seen a little bit of concern in the fourth quarter. This time more so because of the slowdown, stroke recession, stroke whatever happens in America, budgetary cuts, discretionary cut from IT spend, etc., etc. Cautious commentary from some management also in terms of business outlook going forward. We remain positive. I have maintained that even last time when we had the so-called recession hitting America, but it did not happen. IT was down and out. We recommended IT. IT recovered and performed quite well. When this so-called scare of slowdown and recession in US was there, we saw IT index correct, IT stocks correct. I think day before yesterday, it was one of the outperformer. We continue to remain positive from a long-term point of view. And I think there'll be opportunities for Indian IT companies to uh, have a much stable and better earnings outlook going forward into the future. Midcap IT is something that I'm quite interested in terms of numbers, something like, Persistent, Coforge, KPIT, Science Limited will also announce its numbers this week, I believe. So I'm quite excited to look at some mid and small IT companies' numbers.
Okay, that's as far as the IT names are concerned. But you also pointed out in your initial commentary about gold, which has finally hit that 1 lakh mark for the retailers at large as well. But what's the sense that you're getting now as an investor? Would you look at gold at 1 lakh, or would you look at equities at where they are?
Well, as a fundamental guy, it's always better, Sakshi, to spread your risk, allocate your capital in whatever proportion uh, you have risk appetite, time horizon, and return that you want to create. I'll still say that equity, gold, uh, relatively certain other asset classes like PPF, etc. Gold, I believe, since gold has rallied so much, like equity markets have rallied, gold has actually outperformed, Sakshi, if you actually go
Yes.
to see in terms of returns. So gold, you might see correction, but my currently gold is at I think somewhere around $3,500 an ounce.
Yes.
Uh, my view is that we should possibly see by the time we end this year, calendar year, December 25, gold should be somewhere close to about 3,800 to $3,900. So you have still more upside, and this is not the end. I think in the next 3 to 5 years, there is lots and lots of upside still left in gold in terms of price appreciation because they've gone up. There will be days wherein there'll be profit booking, they'll come down. But eventually, long term, I am positive on equity and gold both, including silver.
Okay, fair point. We'll keep an eye out on both gold and silver in the long term then. Markets have settled in the pre-open. 24,357 is what we have on the Nifty. 190 points higher. Start is what is getting indicated of. IT sector could be opening with, most gains among sectors. 2.2% higher is what is getting indicated in the pre-open trade, especially led by HCL Tech. Post refreshingly in line earnings that we have seen. 5% higher is what the move could be on HCL Tech today. Let's also look at Infi could also be opening with 1.5% gains. TCS Wipro could also be among the top gainers is what we are seeing as of now. All the sectors for now in the pre-open are indicative of a positive start as well. Along with IT, there's banks, realty, metals. They could also be opening with positive moves. We will continue to look at how this entire space really functions today. Let's look at some of the other earnings that we've got. Mr. Shah, between some of the cables and wire segments, we have Havells now, which was already performing well over the last few trading sessions, has reported its numbers now. What's the sense that you have on this space? We have discussed this space quite a bit when a lot of news flow was taking place between Polycab, Havells, KEI. What's the sense that you get now? Revenue up 20% for Havells. We're seeing 6,554 odd crore rupees of revenue coming in here, slightly higher than the estimates of the street too. EBITDA up 19%, margins are flat, net profit up 16% odd, 6 rupee of a dividend also there. What should be one's approach?
So Sakshi, I think this is just the beginning. The changes made in the budget by the Honorable Finance Minister Srimati Nirmala Sitharaman ji, 12.75 lakhs, no tax. Our sense is that the discretionary, non-discretionary spend is going to be very well justified by consumers, and you are going to have equal amount of push in both discretionary and non-discretionary. So I think white goods, durable appliances sector, be it Havells, be it Voltas, be it Symphony of the World, be it some other names will continue to dominate the kind of performance. Along with that, with the Met Department predicting that 2025 is going to have above normal rainfall, I think your demand or consumption push from semi-urban and rural India will also give one more advantage to the FMCG consumer non-discretionary, etc., etc. So we continue to like the space that is uh, discretionary spends, like likes of Voltas, Symphony, Havells. This will also have a positive effect on entry level two wheelers, mid-sized two wheelers, and entry level cars as well, Sakshi,
Okay,
because
okay.
the desires have gone up to a great extent.
Fair point. Banks is another one, Mr. Shah, that I wanted to discuss. Over the last few days, or we've seen banks clearly take the lead. This was largely led by HDFC and ICICI post earnings as well. We have been discussing about banks and financials for quite a long time, especially since the beginning of the new year. It turned out to be one of the spaces where you also have been confident about reversals taking place, lead taking place, and that's finally taking shape. Most of these large private sector banks are also trading at 52-week highs. So I want to understand from you, basis the earnings and what the outlook has been shared, do you still find a lot of upside in this space, or do you think now the time to shift focus to financials and PSU banks probably is there now?
Oh no, not at all, Sakshi. I think private sector banks, public sector banks, and strong NBFCs, the entire BFSI segment.
Okay.
Insurance is something that may take some time to perform, but pure banking, public sector, private, or NBFC plays will continue to deliver. Uh, and our sense is that the credit demand is only going to go up from here. Interest rates are coming down. Asset quality, both on gross and net NP, is improving. Provisionings are coming back at a better run rate than it was earlier. And your NIMs and your CASA and your deposits and advances are showing a good steady growth. So I think you should have. I would in fact tell you that I would tell your viewers that if you have a portfolio, make sure that a dedicated percentage of your portfolio is allocated towards BSFI, banking and finance sector, with plays
Okay.
like large caps to focus with.
Uh, how difficult is it to choose between an ICICI and HDFC post earnings, sir, for an average investor? Or should one really do go ahead with both?
Well, I don't think I could be biased towards any one of them. So actually, we have coverage on all. Axis Bank is going to announce its numbers this
Yes.
week also, actually. So we have coverage on all. My only request is don't over leverage yourself on any particular sector or any particular stock, because that may also increase the risk related issues. So have a balanced approach. Keep some of private, keep some of public, keep some strong NBFCs to have a flavor of all three.
What about FPI, sir? Finally, they are returning to India as well. And of course, they have a large exposure to banks and to IT as well. What's the sense that you get there? Finally, are they realizing their mistakes?
Well, honestly, on a lighter note, I think the FI should go and ask President Trump because President Trump thinks that he's the God's answer to this face of earth. Whether they should invest in India or not, because he's Mr. Know It All, right? I mean, others are all fools. But I mean, it did not matter to me earlier, Sakshi. I maintained it when they sold last year 1,60,000 crores. This year, from Jan till last week, they sold 175, 180,000 crores. We are still closer to all-time highs. We are nowhere closer to all-time lows. So this speaks the inherent strength of the Indian equity markets, Indian economy, and India's growth story. So, and I told you this, one thing I always maintain this, Sakshi, that you can hate India, but you cannot ignore India.
Absolutely. Let's also welcome our other guest joining in on the panel now. Kiran Jani, Head of Technical Research at Janam Broking, is with us. Kiran, before the markets open, any two stocks you're keeping an eye out on today?
Very good morning, everyone. So overall, market structure is very strong, and today also we are seeing some gap up opening is happening. There are two sectors which we are liking. Both are the contraband. One is the FMCG. Within the FMCG, there are multiple stock which looking very good at current market price. So one is ITC and another is the HUL. So both stocks are very good at current market price. One can go long. Let's discuss about ITC. There is a rounding bottom pattern. Breakout is there. Any dips towards 430, 425 would be the great opportunity. Keep a strict stop loss below 420, and we can expect price target of 450, 460 in upcoming time. Similarly, HUL is also looking very well. The cup and handle pattern breakout is there. You can go long at current market price. Keep a very strict stop loss of 2300, and you can expect price target of 2500 for sure.
Okay, got that. Let's look at the market open now. 24,297. We are opening 130 points higher on the Nifty. IT sector is the top moving one, so 2.5% higher for this one at this point in time. HCL Technology is opening 5.5% higher. And Tech Mahindra is the second mover on top as far as the Nifty movers are concerned, nearly 3% up. Infosys Wipro also up and about nearly 2%. IndusInd Bank is another one that's been among the top 5 movers on the Nifty. So 4 of the 5 top movers are from the IT pack. You also have TCS now pulling up the 6th spot, about 1% up. Tata Motors, Adani Enterprises, Eternal at 240 odd levels. All of those stocks are moving up. What's not moving in the morning trade? You have Bajaj Auto, Grasim, Cipla, Kotak Mahindra Bank, Ultratech Cement and Sun Pharma still lagging a little bit on trade in the morning session. All the sectors barring pharma are actually positive today. Apart from IT, you also have strong moves on real estate. Over 1% uptick can be seen on this one. Even the mid and the small caps are opening about 0.8% higher in trade. You also have metals, PSU banks, autos also driving the show today. Now even the pharma stocks are turning green, some volatility on that front. When you talk about India VIX, there's a 1.5% uptick, so we have to keep an eye out on that. And on the F&O space as well, HCL Tech is the lead mover, 6% higher. LTI, Mindtree, Coforge, Emphasis, all of them moving up. So even the mid-cap IT names are actually doing very well, which Mr. Shah also mentioned that he's going to be keeping a keen eye out on the mid-cap IT space. PSU stocks, NHPC, Oil India, HAL, REC, ONGC. These are some of the stocks that are moving up. Let's look at the broadest index, the Nifty 500 basket, to see what is moving up with sharp gains today. Any names? Scient DLM, post the numbers, can actually see a strong move on that one as well. About 8.5%, 9% uptick can actually be seen on that front as well. You're also looking at names like... Okay, we have most chip technologies that's up 6% in trade. Vari Energies is another one that also reported its numbers, and you can see 5.5% uptick. You also have names like, for instance, TRF, Kohinoor Foods. These are some of the other names that are actually doing well in the broadest index per se. Let's go back to Kiran. Kiran, how do you see the opening for the markets, Nifty Bank, and where would you keep your attention?
I guess since last couple of days, market has trading into the height of our bottom pattern, and it is a very steep uptrend we have seen. Today we can see one thing that both the indices open and high are same, and they are not breaking their high. Even at least let's wait for 9:30. Post 9:30, if Bank Nifty and Nifty is not able to break their open and high level, then there are chances we can see some profit booking today. So don't chase this particular gap. Stock specific, yes, definitely, and sector specific, yes, definitely. We can find some of the space where you can invest or where you can trade. But broader market, I believe we are into now. We will go into the time correction zone, or maybe some times of price correction will be there. So there are sectors which are not participated yet. They could have been now selected sector like in IT and FMCG. Both are the sector which we are also liking. So during this dip, IT and FMCG sector, anyone can go long.
Anyone can go long. Okay, definitely we'll keep an eye out on that. Let's go back to our conversation with Mr. Shah. Another space that I wanted to discuss is telecom, which we haven't discussed. Bharti Airtel, Bharti Hexacom buying additional spectrum from Adani's data networks. In fact, reports also suggest that Adani is exiting the telecom play, transferring the entire spectrum to Airtel now. What does that really mean for both Bharti Airtel, Bharti Hexacom and the Adani Group, sir?
Well, so Adani Group, we really honestly, as Sakshi, I won't be able to give any specific comments, but Bharti Airtel, we've been positive. And I think if you are really concerned about what's happening across the globe in terms of tariff, then there are a lot of domestic related plays, sectors that you can concentrate. Telecom sector, cellular service provider is one of them. We've been positive on Bharti Airtel. It's one of the large cap stocks which have actually managed to perform much better and reached a all-time high. Correct me if I'm wrong, Sakshi. Continue to be positive. There is likely possibility that second half this calendar year we are going to witness another tariff hike. Tariff means tariff bills, cellular bills. Tariff is a very wrong word. One has to use it very carefully, to be very honest. So your plans are going to become expensive. That's
Yeah.
what our data usage is going up. Connectivity is much better, and second largest service provider in terms of cellular services. This particular news flow will have an added advantage in terms of more coverage, more geography. Uh, so remain positive on Bharti, Airtel, Reliance Industries because of Geo. Vodafone Idea, I think I'll restrict my comments.
Okay, fair point. Anything specifically on the charts from this space, Kiran, that you can mark out for us that you're looking at?
Telecom sector, right?
Yes, telecom.
So in telecom sector, there are two stocks which we are liking. One is the Bharti Airtel and another is the Industrial Tower. If you look at
Okay.
both the chart pattern or both the stock price, it's during this even this falling trend, the both stock has done very well. Now Bharti Airtel has given a breakout from the largest time corrections of since last 8 months. Stock price has a resistance of 1760, 1780, and from that level, once the breakout came, we have seen stock price touch 1900 level. Now again, if any dip towards 1780, 1750 would be the great opportunity. Keep a strict stop loss below 1700 and you can expect price target of 2000 for sure. So Bharti Airtel looks very much promising. Any dips towards 1750 or even at 1800, you can go long. Now coming to the Industrial Tower, Industrial Tower, Indus Tower, I mean to say. So Indus Tower, if you look at, it has given again a very big time correction we can see on price chart pattern. Again, stock price has made a double bottom pattern and a breakout level is somewhere around 380, 85, and the current price is 400. So one can go long at current price, or even you can wait for the any dips toward 390, 385. It's a great opportunity. You can go long, keep a strict stop loss below 370, which is a 200 days moving average, and you can expect price target of 450, 460 in upcoming time. So stocks look very much lucrative. Definitely Indus Tower and Bharti Airtel both are looking very much strong.
Okay. I think once again we'll keep our focus on the IT pack. There's a further move on this one, 3% higher on the index level. HCL Tech is up by over 6 odd percent, 3.5% uptick on Tech Mahindra. Infosys up 3% as well. This is the space that is leading the momentum today and providing support to the Nifty on the upside as well. If I have to ask you, Mr. Shah, any pecking order that you'd have on the IT stocks?
I think HCL Tech, TCS, I mean, again, no favoritism or no bias, Sakshi, because we're positive on all names.
Yes.
But yeah, I mean, HCL Tech has done well. Hope Tech Mahindra will do well. So that could be the first two choice, followed by TCS, Infosys. Midcap, I'm positive on Persistent, Coforge, LTM, Mindtree, L&T Tech. That may be the order of preference. But again, no bias, no specific 1, 2, 3 remain positive on all.
All right. Kiran, how would you really look at HCL Tech post earnings today on charts? Do you think there is still some scope to buy? There is further momentum now at 1580. There are brokerage houses reports that are even penciling in targets of upwards of 1700 on HCL Tech post earnings.
Honestly speaking, HCL after the result, we would not like to chase this particular stock,
Okay.
but definitely overall IT sector looks very much promising. Let me tell you one fact that Nifty IT previously corrected 33%, and after that it has given a tremendous return. Recently also from its all-time high to current level, Nifty IT already corrected 33%, and from there we can see some of the bottom fishing or some of the bottoming out pattern we can see. We can also see some large cap stock like Infosys or Wipro. It is also on their long term support and they are forming bottom. So in large cap IT, Infosys and Wipro are our preferred pick. In mid cap IT, Info Edge look very much promising at current market price. So Info Edge one can go long at current market price, keep a stop loss below 6,700, and you can expect price target of 74, 7,500 per share. So you can have a mix of exposure within the IT. You keep some of the large and some of the mid, and we can expect later half of this year IT would be performed.
Okay, fair point. We'll definitely look at that aspect as well. Let's look at some of the other moving parts in the markets. I think, what's picking up pace apart from IT is the real estate space as well. Kiran, what looks positive to you in the realty pack from last 2, 3 sessions? There is a lot of momentum on this.
So in real estate, definitely we can see some of the stock which are look very much good. One is the Oberoi reality. If you look at the Oberoi reality, the stock price was into the correction phase. Now it is giving a very much from bottom. It is giving a very much upswing. At current market price, this has given a breakout from its double bottom pattern. No doubt the stock price is trading below its 200 days moving average, but if you look at the momentum indicator, it is in the bullish zone. And the way our central bank has given a rate cut, there is a definitely a booster for the real estate sector. So one can go long on overall reality at current market price, keep a strict stop loss below 1650, and you can expect price target of 1900 for sure. So overall reality looks good in real estate sector.
Absolutely. Mr. Shah, we have to thank you in about a couple of minutes, but before we let you go, defense is something that we cannot let you go without touching upon. HAL, BEL, both are now up and about in trade. There has been a slow, gradual recovery across the space, be it the shipbuilders, your favorite stocks too. Tell us what's the approach that you would advise investors to have? Again, are they missing out on these levels to add on, accumulate their positions? Because the way the stocks had fallen from their highs, that's really led a lot of nervousness from within investors who bought this at the absolute peak. Now what is the approach that they should have on the likes of HAL, BL, Cochin Shipyard, Mazagon Dock? They're all recovering from the lows, and some of them are already up 25-30%.
So first of all, don't have 3 months, 6 months, 1 year, 2 year kind of time horizon if you invest in defense. Have 3 to 5 years, purely because of the complexity and the advanced technology and the precise technology that is required to make defense related equipments. It's not like you get an order today from the Ministry of Defense and you'll start making it by midnight or early morning tomorrow. That's not how defense works. It takes a lot of time, it takes a lot of effort, takes a lot of understanding, and it needs expertise and experience, Sakshi. Let us be clear about it. Point number one. Point number two, I don't think anybody has to cry because you just look at the first part of the story. That is, the stocks on defense have corrected 30, 40, 50%. But nobody looks beyond that. In the last 1.5, 2 years, these stocks have rallied 200, 300, 400, maybe more
Yes.
percentage. So
Yes.
I don't think anybody has to complain. If you don't look at time and price, I say this very often. In the forget about defense, I'm talking about any other sector. Because when you try to spend your time trying to find a time and price, you end up in the opportunity lost, right? You got 2.5 week back, market gave you a fantastic opportunity, but you were busy trying to find the right price and time and the level, and you ended up not investing. And look where the markets are today. So at least make a beginning. Take a step forward. Don't take a step back. Don't freeze yourself. Take a step forward. Commit yourself if you understood what you are investing in. And then gradually when you get corrections or you get rallies, go on adding it to it slowly. But purely defense is a 3-year, 5-year play. And most of the government-owned PSUs which are into defense are very strong in terms of balance sheet, very capable in terms of the strong order book execution and translating that order book from top line to bottom line in terms of profitability.
Absolutely. We'll keep that in mind. Well, thank you so much, Mr. Shah, then, for always
Thank you.
sharing that deep insight with all our viewers. That gives them a lot of clarity as to how do they really approach the markets, the right approach to have, the long vision that they must have, and of course, cut the noise and yet focus on what the long-term focus of their own investment portfolios is. Always a pleasure to speak to you, sir. Thank you, and I hope you have a fantastic time till the time we meet you next.
Thank you, Sakshi, and you too. Thank you so much. Bye-bye.
All right, viewers, we'll continue our conversation with Kiran now. Kiran, first 15 minutes of the candle now out. What is it that suggests to you at this point in time? Are we on course to go to higher highs? I mean, just at the pre-open tick, we saw 24,500 and we cooled off a little bit. But is that coming in soon?
So honestly speaking, we are not looking that market should stretch from here. Definitely, as I repeat again, stock specific and sector specific bull run or maybe the upside will be there. But I think now index should give some time correction or should say, give some price corrections also, because you just see from 22,400 to 22,400 to 24,300 is almost a 2,000 point rally on Bank Nifty one side I can say from 15 April to till now. So within 10 days, and we know that in April there are lot of long weekends also, and there are very less trading days. So within shorter time, 2,000 point rally is very much high. On intraday point of view chart, you can see that multiple bearish divergence are also there. We can also see there are some negative patterns are also panning out on indices, and the way 24,500 call I have been written as of now by the option writer, there are chances we can see some fall towards 24,000. So in fact, we would like to go short at current market price 24,300 to 350. We are looking for target of 24,200 to 24,100 for sure, and keep a strict stop loss of 24,500.
Okay, fair point. We'll definitely keep that in mind as far as the markets go. But it's IT that's definitely the star of the show today. It was 3.5% higher now on the index level itself. Nearly 7% of a move on HCL Tech post earnings. Tech Mahindra up 4.3%. Infi, Geo Financial Services, M&M, that's another one that's on the move on the higher side as well. Among the top movers on the Nifty, TCS, Wipro, at least 7 stocks from the top 10 stocks on the Nifty are from the IT pack itself. In fact, when we look at the constituents, I believe it's all the stocks that are in the positive zone today on the IT front. No loser there of as we can point out as of now. Let me just quickly check that. Yes, there are no losers on the IT. It's all in the positive zone. Okay, auto space is picking up well as well, 1.2% higher. I think this is largely led by M&M too, and M&M also came on the radar of brokerage firms today. Positive triggers from that front also flowing in for M&M. HSBC has a buy rating with a 33.20 target price that they have come out with. They believe that M&M's earnings upgrade cycle, although is behind, but FY26 earnings growth may outperform most of the other auto companies. They believe the BEV traction is key, and start has actually been patchy, but pickup in BEV demand is the key upside catalyst for the stock. Valuations seem reasonable at this point in time. Kiran, to you, M&M, what will you do today, and do you think this move is something to be caught onto?
So overall, auto sector is also have a tailwind of RBI rate cut, as we discuss about real estate sector. Similar way, there is a one good things about the auto. Number one, number two. Now the festival season will start, so definitely we can see some booking will come for the auto sector. So two wheeler and four wheeler, both the spaces we are liking. Two wheeler space definitely we like more, so we are more optimistic on Hero MotoCorp and Bajaj Auto for sure. And Eicher Motor, you can see Eicher Motor is still trading on all-time high. It is a clear-cut winner within the auto space. So as a risk perspective, you can have a diversify between the Hero MotoCorp, Bajaj, and Eicher Motor. You can keep as a two-wheeler space. Now, and one more, TVS Motor is also doing well. Now coming to the four-wheeler space, M&M is doing very well. Tata Motor and Maruti are not doing that much good. So from four-wheeler space, definitely M&M looks very good. Now it is trying to cross its 100 and 200 is moving average also. With that on, you can see on daily price that it is giving a breakout from double bottom pattern also. So definitely M&M looks very much promising at current market price. Keep a strict stop loss of 2800 and you can expect price target of 3000.
Fair point. We'll keep an eye out on that too. Okay, there are three sectors that have slipped into the red marginally. PSU banks about 0.5%, and just below the flat line, consumer durables and financial services. But rest of the pockets still are holding up in trade as of now. Mid and small caps look interesting. Both of them are actually higher in trade. Let's look at the mid cap index and the winners there. Mid cap index as a whole is also up and about, with Wari Energy is now 8.5% higher. AU Small Finance Bank post earnings 5.5% up. Coforge, NTPC Green, KPIT Tech, Emphasis, mid-cap IT names definitely in focus. Premier Energy is also up by 2.5%. Motilal Oswal, Persistent Systems, Bharti Hexa, Prestige Estates, all of these stocks are actually up and about. So let's pick out some of them. Vari Energies, let's pull up this one for all our viewers, Kiran. And what is the suggestion that you will have? Do you think again this move has gone off too smart and too fast? Should one catch on to the momentum or not yet so on Vari Energies? After the Q4 earnings, revenue up 36%. We've seen EBITDA nearly double, margins at 23%. So it was expected a strong earnings counter, and that's how the stock has moved up 8.5, 9% higher in trade now.
So Vari, after the IPO, it was a favorite stock for everyone, and it made a high of 3600, and from that now it is 2800. So definitely Vari looks good as it is giving a breakout from the rectangle pattern. With that, stock price is also giving a breakout from the ascending triangle pattern. Looks very much promising. We are not supposed to chase this particular gap up opening, but yeah, any dips towards 2700 can be a good buy. Keep a stop loss of 2500, and you can expect price target of 3000 for sure. So 3000 is the immediate level target, and after 3000 crossing, you can expect 3300 also. But no, don't chase this particular gap up. Wait for the any dips toward 2700. Keep a stop loss of 2500, and you can hold this particular stock.
Okay. Fair point. We'll keep an eye out on that as well. How about AU Small Finance Bank? The strong move there post earnings. Do you think this will carry on?
So on disclaimer point of view, we are already suggested the stocks to our clients from lower level. It has the first breakout given at 560 level, which is a triple bottom pattern breakout. And from that particular level, it is now 650. From here also, it's look like we can expect some price target somewhere around 680, 690. So we are not supposed to change this particular trend, but any dips towards 620, 630 would be the great buy. Keep a strict stop loss below 600, and immediate level, we can expect 680, 690 kind of a target.
Okay, caught that. You know what? The Nifty bank has slipped into the red. All the three segments, I think now, private banks, financial services, PSU banks, giving up some of the gains of the last couple of days. Along with this, consumer durables, oil and gas is also now slipping in trade. So some kind of a pressure building up. We are now at 24,271 on the Nifty, 100 points high in trade. But we've quickly lost some kind of a momentum because of these particular stocks and sectors that are losing some ground. Kiran, your sense on Nifty Bank, what's happening there?
So as we discussed in the morning that we are expecting market to give some time or some kind of price correction for sure, and the similar thing is happening. You can see that Bank Nifty, which is opened 400 point up, now it is into the red of 25 points, and we are expecting this to continue. As of now, Bank Nifty has a very good support of 55,500. If that level goes out, then we can expect some more corrections also. So again, don't chase or don't use this dip to buy. You can book your profit, or you can keep a strict stop loss of 55,500. If that level broken out, then we can expect 55,000 kind of a target also. So as of now, if you don't want to short, you don't go short, but at least don't buy.
Okay, fair point. Still at 24,280 at this point in time on the Nifty, but the Nifty bank has slipped into the red at this point. IT continues to be holding up in trade, be it the large caps or the mid cap IT names. Apart from this, there are some other names also that are doing well. Let's look at the Nifty next 50 names and the Nifty names as well. You have Eternal now moving up. I wanted to discuss this. Even Swiggy is just slightly higher in trade. This new age tech stocks, Zomato, Swiggy, Eternal, that is now, for Zomato. What exactly would you say on this one, and how would you trade these stocks now?
The Swiggy is already in our portfolio, honestly speaking, though would not like to comment on Swiggy. But Eternal, if you look at prices, is taking a resistance of 100 days moving average. But overall chart pattern, it is giving a breakout from the double bottom pattern. So there are very much high chances you can expect price target of 260, 280. So at current market price, anyone want to go long, they can go long. But as we discussed, that market structure is little bit scary. We can expect some price corrections. So use these price corrections at any dip. You can go long on Eternal or a Zomato, keep a strict stop loss below 210, and you can expect price target of 250, 260.
Okay, fair point. We'll keep an eye out on that. The broking related stocks are doing well. Some momentum was also seen in the last couple of days on CDSL, on K Fintech, 361 WAM will be coming out with the earnings now. Angel One, even Motilal Oswal is up by about 3% today. 361 WAM. You also have Geojit that's up in trade. Many of them that are buzzing in trade. Anything specifically that catches your attention, Kiran, here?
If we look at the brokerage houses stocks, the BSC looks very much. If you look at the BSC chart price, it has given a breakout from its recent time corrections and recent price corrections also. So 6,000 is now a strong support. Any dips towards 6,000 would be the great buy. So again, here we are not liking to chase this particular stock at current market price. But 6,000, 6,100 is a great buy. Keep a strict stop loss below 5,800 and you can expect price target of 65, 6,700 for sure. Another stock which we are liking, it is a CDSL. So BSC is the
Okay.
trending stock. It is already into the heart of high bottom pattern. But if you discuss about the CDSL from 1900 to 1100, the fair corrections on price tag. Secondly, from February to April, it has made a very beautiful technical pattern that is called rounding bottom pattern. And now stock is giving a breakout from that particular price pattern. So it is a very good pattern to enter at current market price. Keep a strict stop loss below 1250, and you can expect price target of 1500. So CDS and BSC both are looking very good.
Okay, fair enough. We'll definitely keep an eye out on that as well. Let's look at some of the other stocks. Within the NBFCs, I wanted to ask on Geo Financial Services. What's your take there? 2.3% higher, 256. What's in the offing for Geo Financials at this point in time, Kiran?
So Geo Financial has also made a very beautiful, I can say, bottom at its previous bottom level, somewhere around 202, and from that level now it is at 257. So at current
Hmm.
market price, any dips toward 250 would work great by keep a strict stop loss below 240, and you can expect price target of 280, 300 for sure. So Geo Finance very good at current market price. Definitely one can go long.
Definitely one can go long here, and we'll definitely keep an eye out on this space as well. Let's also look at some of the other pockets then. I also wanted to get a sense on something which we have not touched thus far. Pharma stocks, out of sight or so far, 0.4% of an uptick today. Anything here that gives you any confidence at this point in time, Kiran?
So in pharma, Divi's Laboratory looks very good at current market price. If you
Okay.
look at Divi's Laboratory price chart, the stock price has recovered from lower level, and now
Hmm.
it is sustaining about the previous resistance. We can see 59, 5,800 was the resistance. Three times stock found resistance and deep down. This time it has broken down its previous bottom also, but now the recovery is fantastic. Now it is trading about its all important moving averages also. Momentum indicator is approaching into the bullish zone also. So definitely one can go long on DBS Laboratory at current market price. Keep a stick stop loss of
Okay, we'll definitely keep focus on this space as well. Pulling up some of the other spaces too. Let's now focus on some of the other pockets. Within the broadest index, let me pull up some stocks which we can ask. Kiran to help us out. Okay, Huhtamaki India, that's up 8.5% after a long haul. Of course, brokerage houses updates, earnings too. What exactly would your thought be on Huhtamaki?
which stock we are discussing.
So this is Huhtamaki India Limited, 216. Today there is an 8.7% move on this one. Huhtamaki, Huhtamaki India.
Okay.
Should I give you
Huhtamaki
the,
India.
yeah,
No,
so
no,
Huhtamaki
oh,
is on NSE, is the code as well. Yeah.
correct. So Uta marking, if you look at the price has given a correction from 400 level to 170 level, and from 170
Yes.
level it started building a base, and we can see there is a rounding bottom pattern. Secondly, stock price after a long correction, it is sustaining above its 50 and 20 days moving average. Momentum indicator is also into the bullish zone, and the volumes are picking up since last couple of days. So it's a clear cut price action, price volume action breakout is there. One can go long at current market price or any dips towards 210, keep a stick stop loss below 200, and you can expect price target of 260 for sure. So it looks promising. You can go long with the stop loss of 200 for the 260 target.
Okay, one more stock that I will take your view on is Tata Communications now. The shares are in focus after Q4 profit has jumped over 3 times to 1040 odd crore rupees on strong digital, growth that we have seen now for the company. So the profitability has more than tripled, but at the same time we are seeing some tad dips on the margins front, and that's been given up as well. What we are going to be seeing is that the company has also talked about dividends on this front too. Any suggestion on Tata Communications particularly? Revenues from operations have increased 6%. Digital revenues now make up 50% of Tata Communications offerings. A final dividend of 25 rupees per share has been announced by the company. Profitability is good, but margins still a tad, uncomfortable.
So Tata Communication, if you look at the price chart, it is forming inverted head and shoulder pattern, but breakout is not coming. So it's a conditional buy. If it is goes above 1640, then only we can go long. Otherwise, I think we should avoid this particular stock. Above 640, you can expect price target of 1900 for sure. It's a very good bottom outing pattern is forming, but unless and until it is not crossing 1640, we are just wait and watch.
Just wait and watch at this point in time. Okay, then, Kiran, thank you so much for being with us in the morning edition. First half an hour is out of trade at this point in time. We're back above 23,300 at this point, 24,300 at this point in time, 160 points higher. And it's IT clearly that's been in the winning show today. 3.7% continues to be on the index level. And we'll continue to look out for how the trade really pans out on IT and what's next from here on as well. Kiran, thank you so much for sparing your time and sharing all those insights with all our viewers today. Viewers, on the Nifty, you are 0.7% up. On the mid and the small caps, there is a 0.7, 0.8% of a move that you can see on the higher side. IT is the top mover with 3.7% move. Realty, autos, FMCG also up in the bout and trade. PSU banks and consumer durables slightly on the lower end. HCL Tech, Tech Mahindra, Infosys, Wipro and M&M are the top 5 movers on the Nifty, whereas on the lower end, you do see names like Eicher, Trent, SBI Life, Kotak Mahindra Bank, Eternal is now giving up some of the gains on that front. So we'll focus on that as well. But throughout the course of the day, viewers, we'll continue to get you earnings conversations, market chat. We'll answer your queries on daily calls as well. And of course, at 4 p.m., there is a special interaction on gold with the top voice on gold globally who will be joining in, Jim Rogers. Stay tuned with us.